Brown Show, where we talk about all things investing, options trading, and the like. Now here's your host, AJ, whose primary mission in life is to help you become a better investor.
Good morning, world, and welcome back to another episode of the AJ Brown Show. My name is Cyprian Francis, and with me, as always, Mr. AJ Brown. Good morning, AJ. How are you doing?
I'm doing well, Sip. Thanks for asking.
Our theme for this week is back to school. Back to school. The kids are getting back to school. The folks are getting back to their groove. Schedules are starting to get back into the fall season. And we're here to educate the folks on what to do in the markets. And so 2 weeks ago, we had a huge sell-off. The week after that, we had a huge rally. And it seems as if this week we don't know which way to go. We want to go up. We want to go down. We're waiting for information. What are you seeing? What are your thoughts? Where do you want to begin?
I mean, you summed it up perfectly. For most of the week, we were waiting for information, waiting what was going to happen next. We got a report from the Bureau of Labor Statistics that said, hey, we've been overestimating some of our jobs for the past year. Maybe the numbers all across the year have been down about 65,000 per month. So that kind of jolted investors, and it jolted maybe the Fed. We don't know, but the Fed, of course, they're down in Jackson Hole, Wyoming for their annual. And we just a few minutes ago had a press conference with Fed Chair Jerome Powell, and he actually gave verbiage that it's time to start cutting rates. So, when you take a look, I'm going to show up on my screen the futures. This is what investors feel like is going to happen next. If you take a look at the September 18th meeting, I mean, this number right here, this 65.5%, that number is actually going down. And it's not because this is for a quarter point rate drop. So it's not because people think that a quarter point rate drop isn't going to happen. It's because this number over here for a half point rate drop has been increasing. So people are actually, you don't even see the one where it says no rate drop anymore. So it's almost a given that there's going to be something. And it seems like people are starting to believe that maybe there's going to be a half point rate drop in September. If you look at the then November meeting that's coming up, now all of a sudden you're seeing it even more. So this would be a half point right here from where it is currently. This is 3/4 of a point. So what investors are banking on as of today is that either in the September or in the November timeframe, we're going to drop interest rates by a half point, not a quarter point. And then finally in September, not September, let me jump to the end of the year, December. You can see here, this is a whole point right here. So it's almost like there's going to be a quarter point, half point, quarter point is what people are banking on. There's still a holdout of people who say it's just going to be quarter point, quarter point, quarter point. And there's another holdout that says it's going to be like quarter point, half point, half point. So somewhere between 3/4 of a point and 1 1/4. And right now, today, the majority for the end of the year is that we're going to have dropped a whole point.
And it's kind of crazy to think about because it's been how many months since we've lowered interest rates, and then for the investors to say we're going to go more than a quarter, we're going to go half. It's like today might be the first time that he actually mentioned that they're going to lower rates, right?
And there's always investors always hope that rates are going to go down and money gets, easier to borrow, right? But so, they may be overzealous as of today. But I think we can definitely start counting on quarter point rate drops over the next few sessions. And then maybe in 2025, maybe they hold for a second. Um, but yeah, it looks like we probably will be around 4.5 by the end of the year.
And for the novice or new investor, right, who may be tuning in and listening, um, rate cuts are usually a good thing for the stock market, right? Unless there's the rhetoric of things are bad, so we need to cut faster than right. So we're kind of like, okay,
Yeah.
good, but too many cuts is bad because we're having to play catch up because we overshot, the raising part.
Yeah, it has to do with risk appetite. So when money is quite easy to come by, meaning it doesn't cost so much, interest rates mean that money costs something to borrow, right? So if money starts to flow freer, well, then people are willing to borrow money to buy big purchases, borrow money to buy small purchases on credit cards. And people are willing to invest in kind of riskier asset classes like the stock market. Um, on the flip side, for that broad-based investor, when interest rates go down, bonds go down, our more passive investments go down. The ones where you just put your money someplace like in a bank account and you hope to earn a decent return. That's not going to happen when interest rates go down. So, it does help or buoy the markets, and that's simply because leaving your money somewhere else is just not worth the time.
I do have a question about this employment number, right?
Mhm.
Because when it hit the news wires this week, to somebody who doesn't really pay attention much, to see that we were off by what, 800,000, 600,000, something like
Yeah,
that.
yeah.
How does that even happen? And should we be worried that our economic data is so inaccurate that we have to wait for these revisions? And it's like, well, what are we even basing our decisions on if the data is not right?
Well, I mean, that's one thing here in the US that has always been difficult is how do you report on these things? Because here in the US, we pride ourselves on our freedoms and our privacies. And so there's no central database for what people are doing employment wise, right? I mean, in fact, you would think, well, why can't you just pull up tax returns, right? But tax returns are guarded here in the States where you can't pull any data or, pull data from that for any other reason than just calculating taxes. It's all built into our system. So, yeah, there can be errors. And this one from the Bureau of Labor Statistics really surprised everybody because they just came out and they said, hey, this past year, we probably had a glitch in our algorithm. And so we might have overestimated the number of jobs by, 800,000 or about 65,000 per month. And so people are like, what? But yeah, there's a lot of algorithms. I mean, there's a whole, discipline in how to collect data here in the States. It's a science. It's taught in colleges. It's interesting.
So we shouldn't be too worried about it. That's just the name of the game. That's just how it's always been. We get those revisions, we react, we move on.
I mean, that is the name of the game. I mean, the scoop is how we use our money and how we decide to invest or spend. I mean, that's our own personal decision, right? You get the data, and if the data is relative, I mean, if it's been off by 65 every month, it's still relative to each reporting, the same frequency, right? It's just globally been off by a certain amount. So, you don't get too surprised except for when they do these broad-based corrections. And then you, just like you said, you deal with it and you move on.
I would like to pull up the S&P real quick if we can.
Yeah.
Maybe take a look at what we referenced in terms of the pullback and the rally, and now the chop. Because I know later in the show we're going to talk about the choppy session, the market not knowing if it's going to go up or down. And how we can use options and premium selling to take advantage of it. But when you look at the market where it is now, what are you thinking? What are you seeing?
Well, so there's different ways to analyze, you know, the markets. One of these ways that I like is called technical analysis. That's where you use different sort of indicators that are looking at the data, price data, volume data in the past, and you're looking for repeating patterns. But there's also things like chart patterns and bar patterns that people use. And there's, of course, data about the individual companies, right? That's called fundamentals analysis. And then we had Fausto on the other, a month or so ago. And Fausto does what I call quantitative analysis. He's actually looking at the order flow, the buying and selling, and the number of orders that are queued up to be filled, right? And he makes his trading decisions based on that. And I like to take kind of a holistic view. I like to use all these different methods, and if they correlate with each other, if they agree with each other, you've got to trade. All that to say, there's a common pattern called a key reversal down. This is a bar pattern, right? Bar patterns are like key reversal downs, Lincoln's hats, upside down Lincoln's hats, dojis. If you're into the candles, I mean, there's a whole mess of bar and chart patterns with candlestick analysis. But the key reversal up or down, this is a key reversal down pattern. What it is, Sip, is it's when you have one bar, right? And then the next bar has a higher high, but then a lower close. And what that usually tells you is that, you're perhaps finding a top. We had two of those. So if you look over here, this is Monday right here. Monday was a nice, up bar. But then on Tuesday, we had a higher high, and then we closed lower than we did on Monday. Now, Tuesday was kind of what we call a doji bar, where the opening and closing prices are very close to each other. That means that the bulls and the bears kind of had it out during the day, but when all was said and done, not much happened. Then on Wednesday, we had another up day, but on Thursday, here's another key reversal down bar pattern, and this one was significant because not only was it a key reversal down bar pattern, it was also one of these where you opened up high, and then you went low. That's called a Z bar because it kind of looks like the letter Z. These are all like increasing hints that perhaps we're finding a top. Now, I use technical analysis. You guys can go and download my indicator suite for free. And the one that I'm using here in order to decide what the broad market is doing is my confirming indicator MA, which stands for moving average. And go ahead.
I didn't have anything. I'm listening.
Oh, right on. I thought something was happening. So on the moving averages, I'm using a 3 and a 5 exponential moving average crossing. And so my arrows pop up here when I get, and this is called a lagging indicator. It's a few days late, but it makes sure that we indeed saw a top or a bottom. And so what I like to do is when I see one of my indicators saying that a top or bottom has been found, I'll look back for those key reversal up. I'll use those bar patterns as a sort of validation that my indicator really did find a top or a bottom. So I wouldn't be surprised if my indicator appears in the next couple of trading days and we look back and we're like, yep, that for sure is a top. We should start thinking about going down.
Because we are near highs for the year, all-time highs, right? Like that's what we're driving up towards, and we're waiting for something to help push us through, which could be interest rate cuts. I don't know. I mean, I feel like we would need a lot of positive news to break through that. Tell me if I'm wrong.
I mean, my forecast, and we've been saying this for a while on this show, I use retracement analysis. So when I identify one of these reversals, I like to, basically chart the move between high reversal to low reversal to high reversal. I call it tops to bottoms, tops to bottoms. And I like to compare each move to its subsequent move. I even sometimes compare a move to its new move, right? With that said, when you have a move, so this last down move we had a couple weeks ago, it went down significantly, meaning it overpassed its prior move up. This 100% number that here, let me get my marker out. This 100% number that we can see here, we shot past it. So we went lower than where we started in the last move. And that kind of changes our view on things. You can see here we started a new trend line. It means a new trend, a new medium to long duration trend is starting. But we didn't go so far, Sip. We didn't dip down to where we started to think about, a bear trend or, a downtrend. Instead, we kind of went just a little bit past that 100% mark, and then we reversed back up. And now, as you can see here, we're not really making it to the 100% mark before, but we still are more than this halfway mark, right? We've got a halfway mark here in this lavender zone. We went past that. So we're basically kind of hugging these 100% retracements. What does that look like when you go 100% each time? It looks like a sideways choppy market. And I actually think, Sip, that we're not going to get any news, even after the presidential election, that a lot of investors put some bank into who's going to be the next president. But I think this time around, I think we're in this sideways choppy, going about 100% each time we move up or move down for the foreseeable future, probably into 2025, maybe even halfway into 2025. So we're into just like kind of marking time. Looks like we're going to be bouncing between about 5,200 and about 5,700 for the foreseeable future.
And I'm very surprised at how quickly the money came back into the market to get us back to those levels, because there was like a solid 3 days of everyone thinking that the world was coming to an end, due to the unwinding. But 1 week later, we're back to these high levels, and yeah, I'm glad you were going to pull up the VIX, because it is giving us a sign that things have cooled off since that big move to the downside.
Yeah, definitely. When people start to get scared, and I might even venture to use the word hysterical. When people get hysterical, I mean, and it's catchy. Everybody around them gets excited. The talking heads start to get excited. They get to sell commercials and to get ratings and things. So they get caught up in the loop, and it's almost like we feed off of each other. But with that said, once the air clears, we come back down. But the lasting effects, I mean, you can't argue that before we were hovering with the VIX around, 11, 12, $13. And now we're hovering between 15 to 17, even $18. So people are more on edge than they were even a month ago, with having that scare, and that takes a while for that to bleed out. And I actually don't think it will. I think the VIX is going to stay a little bit higher as long as we're sideways channeling. I think that the VIX is going to stay up here closer to its mean, maybe even a couple times spilling over its mean for the next months, and that's fine.
All right. So, as you've been showing the charts, just want to let the folks know that you can grab access to AJ's indicator. It is the link is in the chat, and it's in the scroll bar. I see you pulled up gold. Gold is still running near these highs.
Yeah. So in addition to people kind of sideways channeling, not only is gold at an all-time high, right? It's at 2,550 bucks. That's an all-time high for gold. Not only is and gold is a place people put money when they start to get, antsy, when they start to get scared. It's either they put it into gold or they, take it out in cash and sew it into their mattress or bury it in their backyard. So we're seeing that. We're seeing people taking their money out of more riskier investments and putting it into, gold and bonds and things like that. In fact, we're even seeing, I don't know if you noticed, but crypto, crypto is weird, right? Is crypto something that people use? Well, so far, most people just use it if they're trying to hide what they're buying. Like if they're going to, kill their significant other or something like that, they'll use crypto or buy something illegal. But, or is crypto a store of value? Is it like gold where you buy crypto? Well, right now, this week, crypto is acting like a store of value. It's been going up, for a while there. The fact that it was kind of the new kid on the block, and is it real? Is it, eh, people were selling off of crypto, but now it's back up. It's up at $61,400. So that kind of shows that, people are looking to put their money in anything they think is a sure thing right now. So that's usually accompanied by people thinking that, hey, it's getting kind of risky out there.
Gold, crypto markets, VIX, all good stuff. And in our next segment, what we're going to do is take a look at how we can take advantage of the potential chop, right?
Yeah.
Seeing as your analysis, is indicating that we're going to be in this level for a while. Let's find some ways to make money off of it. So, with that being said, let's go ahead and give everyone a chance to jump in your free daily workshop. We'll go ahead and throw the link to that in the chat. If you haven't checked it out, if you want to learn more about Trading Trainer and the approaches that the team takes to investing and learn these awesome 4 strategy shortcuts to using your portfolio and treating it almost as if it's a additional job or income that's extra. So we'll go ahead and throw the link to that in the chat. We're going to take a break, and then we're going to dig into, why this is a good time for us premium sellers. We'll go over AJ's pick of the week. We'll do a little bit of speed round, and then if there's any questions, we'll go ahead and answer it. But it seems like this week is back to the summer doldrums. Like we had 2 crazy wild weeks of excitement, and now we're back to let's slow things down until we get to September, and September probably start to pick up. But we'll discuss ways that we can take advantage of that. We're going to take a break. We'll be back in a second. Sit tight. If you have any questions, throw them in the chat. Otherwise, we'll be back in a jiffy.
You're afraid of trading in the markets. Guess what? I've got your answer. I've got 4 strategies I'm going to give you along with the tools to make it super easy. I'm going right home, giving you the webinar. I need you to sign up below and meet me in a few minutes.
All right. So AJ, seeing as we just looked at the VIX kind of down there at that low, and in theory, if it starts to creep back up, that's good for us premium sellers, right? Because those insurance contracts that we're selling to the market increase in value, and so like our dividends are a little bit higher. And is that a good way to look at, the next couple of moves? So,
Yeah.
let's go ahead and pull up the question for the topic, and that is why selling options is the right thing to do in a sideways choppy market. Where do you want to begin with that?
Well, so sideways chop always freaks out, traditional investors, right? Because number one, identifying these tops and bottoms, if you're trying to, if really nailing those tops and bottoms is, your way of making money. And usually trend following traders, that's how they make money, right? They identify a bottom, and then they identify when it's going to be a top, and that's your entry and your exit signal on a directional position. And if you've got a directional position, you can use a leveraged option. You can buy an option that's a leverage, and really capitalize. And you can do that in the down or the up direction. But sideways choppy means that you're going to have to be trading more often. You're not going to make as many gains, and you're probably, if you're a directional trader, you're going to get sloppy, because identifying these tops and bottoms isn't the easiest thing to do. And so if you're actually buying into that, with whether you're buying stocks, shorting stocks, buying underlying symbols, or if you're buying leveraged puts and calls, it starts to get more frequent, and it also gets more sloppy. But I put it out there because a lot of folks are saying, hey, the market is no more just a sure thing. I can't just put my money in Nvidia and have it make money for me. So I'm going to take my money out and just sit on it. And I actually want to give you an alternative, right? What is, if we can't count on the direction of the underlying symbol, right? If we can't count on it either going up or down such that we can make money, like we have been on Apple, we have been on Microsoft, we have been on Nvidia, to a lesser degree, we have been on like a Google or an Amazon. If we can't count on that, like people have been for the whole, 2024 to date, what can we do? What can we count on? Well, you already know that the Fed's going to lower interest rates, so you can't count on just putting your money in the bank. You're going to get lower rates than you expect. What we can count on is that time is going to continue to pass by, right? We know that a second, there's going to be 60 seconds in a minute. There's going to be 60 minutes in an hour, 24 hours in a day, 7 days in a week, 52 weeks in a year. That's not going anywhere. And options have because they have an expiration date, they have a known way that their value, bleeds off over time. I challenge anybody to go and grab a Google window, which I'm going to do for you. I'm going to go ahead and demonstrate that right here. Let me go ahead and pull this up. And I'm going to open up a new tab. And in the Google search engine that shows up, I'm going to type in option theta decay. It's the first one that came up because I've been typing it in a lot. I want to show people why they shouldn't just take their money out of the market right now, but they should just do things a little differently. If you take a look at this image right here, and I'm going to open up the website that contains it, and I'm going to go ahead and just open up the image itself in its own browser window. So if you take a look at this curve, this is the way that an option's value decays with time. And it's actually this is a visualization of human nature, right? This is how we procrastinate, right? If you think of somebody who's got a young person who's got a science report due, they'll do a little report, a little bit of effort on month 1, maybe a little bit more effort on month 2, more. And then, 2 weeks before the science report, they're spending all their time in the library every day, pulling all-nighters and things as it gets closer and closer. Well, that's the same thing with options. We don't really worry about its value decaying until, the last 30 days. So you're probably asking, why am I showing you this? Well, if this is how an option's value decays, why don't we make sure we're on the right side of that equation? Why aren't we just selling options, letting time pass by, and having the value go to zero so that we don't have to worry about buying it back, right? And we don't want to do it for too long because, if you sell something 60 days out, you don't get, it's the juice ain't worth the squeeze. You only get a little bit incrementally more money if you go twice the amount of time out. It's better to like do a 30-day option, let it go to zero, and then do another 30-day option and let it go to zero rather than going 60 days on the same option, if that makes sense. But then the kicker is when we do go sideways choppy like this and the VIX starts to go higher, guess what happens to this curve? Well, I'll tell you what doesn't happen. What doesn't happen is there isn't any value at day zero, right? Because at day zero, an option is worthless. That's like the definition of an option, is that at day zero, all of its extrinsic value is worth nothing. And so that stays the same, but its value as we get farther away from the expiration date goes higher. So not only do we have a strategy now, if we get into the business of selling options, not only do we have a strategy that works when directional is not going to be a given, we now can, go on time being the given. We'll sell options, but it just so happens that when direction is no longer a given, options are worth more. So it's even more of an incentive for us to be on the selling side of options and take advantage of this time or theta decay, because we're getting more now than we did even a month ago for the same options for the same amount of time. So I put it out there that now is the best time, not the worst time to be in the markets. Now is the best time. And I say that because if you are up on how to sell options, specifically near term at the money options, you're going to get more money than we've been getting all year for the same option trades. So I'm just saying now is the time to pivot, and the strategy of choice should be selling near term at the money options.
And it seems as if one investor has a portfolio or some longer term names, the fact that we've
Mhm.
rallied up to these like previous highs has lifted the value of the whole portfolio, but the risk of it coming back down might still be there. And why not hedge yourself with selling some options? And so with that, maybe we could go through the pick of the week, your example, to see how it actually looks from a technical perspective of taking this this logic and applying it to a real case scenario. So with that, let's dive into your pick of the week and see
Mhm.
if we could walk through the same logic that you just described to give us an example in real time. And so you're looking at this week, your pick of the week is ING Group, ticker symbol ING.
Mhm.
And is this a similar setup in that we're going to be selling options because we think that there might be a pullback?
Absolutely. And we can do it both ways, Sip. I mean, options are uberly flexible. So we can actually sell put options. We could even sell call options, and you would do those in different circumstances. Here, let me explain. First of all, ING is a bank, right? It's originally a bank from Dutch. It's a European bank. And I think this is a good place for us to put our money as things get a little bit unsettling with interest rate drops. As you can see, ING is in one of those patterns that we like, where it's sideways choppy. So it's not really going anywhere. You wouldn't want to try to trade this directionally. Plus, there's some, gapping from the morning to the evening because the after hours traders are in different time zones. So they're moving the price of this in the afternoons, evenings, and even in the pre-session in the morning. So, I don't want to trade it directionally. Instead, I want to do what we were talking about before. I want to set it up so I could sell option premium and have it expire worthless. Also, Ing, gives a very nice dividend. They always have positive earnings, as most banks do. So I'm using one of my indicators that you can download. This one is called the Confirming Indicator MACD. It's set up such that we're using the fast MACD settings. These are the MACD settings from the folks over at the MACD think tank. That's a 6, a 19, and a 3, all exponential moving averages. You can see that right here in my settings. The only thing that I'm doing a little bit unique, and my indicator allows you to do, whereas the standard MACD indicator does not, is I can choose what the MACD is calculated on. And I've chosen to have it calculated on volume weighted average price rather than just the closing. And so I get a little bit of volume validation in my arrows, in addition to the traditional MACD indication. So these might be a little bit different from a regular MACD or fast MACD. With all that said, I was looking at the signals that have come at each one of the bottoms and tops, and they're very close to helping us, get our best reward and minimize our risk. And so that's what we want to do. We could either, and one other thing I'll say about Ing is that substitute options. I don't really find that there's any good substitute options in Ing. So you're going to have to do everything with the stock itself. So, when we identify a bottom, generally what we're going to do to sell premium, we have to set up what's called a covering position. So at a bottom, you would buy some of this stock, and you would buy it in lots of 100 because options are sold in lots of 100 called contracts. So you would buy stock in 100 share increments. And then when you get to your top, and you don't even have to nail it perfectly, you just want to beat your kind of middle price target. But so long as you're kind of identifying a top, that's when we want to sell our call premium. And you can even buy your protective put at that time. For a protective option, in this case, protective put, I'd go out about months, probably error to the 6-month side versus the 3-month side. I'd probably pick a price down here right below my break-even price. And I would use that as protection. It'll be nice and cheap when you buy it up here at the top reversal. And then you just let time pass by. Tick-tock, tick-tock. And as the time passes by, SIP, this thing is going to, the premium we sold is going to lose its value. You saw that curve we pulled up on Google. It loses its value exponentially. And at the same time, that protective option that is offering us protection if things go off the rails, it's also actually gaining value because we bought it the correct way. And so when our option finally expires worthless and we get to keep that money we made up front, we can then look for an opportunity to sell back that protection at a profit we don't need anymore. And then we can just repeat the cycle, pretty much create a monthly income out of owning the Ing stock. Now, on the flip side, one more thing. On the flip side, we're about to get to a top. We've already missed the bottom signal. So you can do the opposite, right? You could short this stock, which then allows us at the bottom reversals to sell put premium. It operates the same way, creating that monthly income. We would buy a protective call up here with a strike price of $18.50 or $19, 3 to 6 months out. And then we would just roll those out. And it acts just like the same thing as if we did it by buying the stock and selling calls. So you could do it either way. And so we'd probably be looking for that transaction next, SIP.
And a really phenomenal price point, right? Under $20 as a stock, which makes it a little bit easier to buy, just having less money to get into the position. And then I'm seeing a lot of gaps, like gap ups and gaps. Is that because it's mostly like a foreign company and that like things happen outside of US market hours?
In this case, that's exactly the reason. And that's another reason why maybe I don't want to, trade this directionally. I would rather trade ing by selling that time, because even with all these gaps happening, time is still passing by reliably. Like I said, 60 seconds in a minute, 60 minutes in an hour. That's not changing even though ing is gapping. So I don't want to trade the gaps. I don't want to trade the directions. I want to set myself up to watch that timer just tick down. And every time the timer ticks down, I want to do it again and do it again and just keep creating kind of an income. I bet if you sized this right, these positions right, you could easily make 10% on your invested capital on ing or more every month.
All right. Well, we'll keep an eye on that ing group, ticker symbol ING, AJ's pick of the week. Something that you should keep on the radar, add to the watch list, and keep an eye on. So, ing, thank you for that breakdown, AJ. Let's move into our speed round. We got some interesting names here from all across the country, and the people want to know what you think. If you want to get in, if you're seeing any opportunities. So let's start in sunny Miami, Florida. This is Anna, interested in lingerie manufacturer, retailer, Victoria's Secret, ticker symbol VSCO. They should be a popular brand come the holiday season. Am I wrong?
No. The scoop with Victoria's Secrets, boy, they've been trying to recreate themselves. I remember when I was teenager, college age, I mean, it was all the rage to be in that Victoria's Secret model thing. Everybody would stay up, just like they would stay up to watch the Super Bowl. They stay up to watch that Victoria's Secret. That's kind of fallen to the wayside, recently. But yeah, I think, Victoria's Secret is still one of the busiest stores at all the malls. And, they still have a presence like at the holidays. But I see what you're seeing in Victoria's Secrets, Anna or Anna. I see a top forming. I see earnings coming. Earnings has been okay. Sometimes earnings is quite stellar. Sometimes maybe they're doing some sort of something in investment into marketing or whatever, but they still wind up squeaking by with some earnings. I'd be curious, this is going to be on August 28th after the market closes. So I'd probably be curious. I wouldn't want to, trade this until earnings is released. But one of the things that I see here two times ago when earnings was released was a real gap down. The candlestick folks like to call this a falling window. And what that usually does is that creates for us a level of resistance. But still, I don't want to do anything until this next earnings is released and I see what kind of blowback we get there. But if, it's either ho-hum or something like that, I could see wanting to short Victoria's Secret in lots of 100 shares so that I could be prepared when it comes down to this $16 to $17 range to sell that put premium and buy those protective calls. So I could see doing that. I don't want to do that until earnings has come and gone. And let me do one more thing for Anna. Let me check the option chain. So I see a lot of expiration dates. That's great. I'm going to look at this January option. I see that it's trading every $2.50 up until $25. Then it goes every $5. And I'm looking at the bid-ask spread first on the call side, then on the put side, to make sure that the numbers are not too far apart. If they're too far apart, that tells me that the option doesn't have a lot of buyers and sellers. You go into that virtual room where people are buying and selling and there's only 2 or 3 people. You would rather be in one of those rooms where there's standing room only. But this looks like it's kind of got some interest in it. And if you don't want to, let's look at this March 2025. Well, now the March 2025 is trading every dollar, and there is some healthy liquidity there too. Let's see. But I'm not finding, let me look on the put side. What I'm doing is I'm comparing this extrinsic price to the mark price. Maybe on the put side, we could use this $35 put. What I'm looking for is, instead of buying the stock, could I use a substitute option? And I think on the call side, maybe no. But on the put side, instead of spending $23.65 per share, I could be spending $11.85 per share. Also, if I'm at the top, I would have to short a stock. Whereas if I use the substitute option, I would go long this $35 put option that expires in March of 2025, which I would rather do. I'd rather make it a cash transaction. I could do cash transactions in my, tax-free Roth trading account. So I like doing that whenever I can. So you might consider using this $35 strike price expiring March 25th, March 21st, 2025 as your substitute option.
All right. There you go, Anna. Victoria's Secret. You got some options, but like AJ said, you might want to wait till that earnings call to flush out any of the volatility that might come.
Let's make sure it doesn't go crazy.
Yeah. All right, cool. Moving on to our next name. I call this a COVID darling. This is Lonnie out of Cleveland, Ohio, interested in Pfizer, ticker symbol PFE, which seems as if this company's kind of been off the radar since, 2 years ago.
I think now they're trying to figure out, now that their biggest customer is not the various governments, now that it's individuals, they are trying to figure out how to keep the money machine flowing. I think that they're planning, maybe by design, to keep, having a vaccine. One of the most profitable companies out there are ones where there's consumables involved, right? Vitamin companies are very profitable, right? And so you almost wonder, we're asked to get an annual flu vaccine. Is that because we can't solve the problem? And I have no medical degree. I have no science degree. I don't know anything. But is it true that we can't just solve the problem, that the viruses mutate that much? Or could there be, and again, I hate that I'm talking about conspiracy theories, but could it be that these companies would rather sell us something that's kind of expensive every year rather than a one-time cure? I don't know, but I think that's where Pfizer is right now. They're trying to figure out if, should they be selling a annual COVID booster, and will they have enough buyers, especially, things like that. Okay. With that said, Pfizer's at a bottom. I see why you're interested in it. They've already had their earnings call. They've already given out their dividend. I'm not sure. Let's see if they had given us follow through. So we got an end of day signal on August 19th. So that was about a few days ago. Let's look and see if in the subsequent days we would have had a trade. So if I pull this up, I get rid of all these, I just want to know if I would have had intraday follow through. So I'm getting rid of all my indicators, and I'm coming up to a 15-minute chart. So we said August 19th. So that's right about here. So on August 20th, we would want to have had, in order for us to place a trade after getting that end of day signal, we would have wanted to make sure that price was above that confirming day close. We want to also make sure it was above the previous day close, which are same price. And then also I have a little day trader's trick. I like to make sure price is above the high of the first 30 minutes of trading. And so, and I don't come in and do any trading till the afternoon session. I wait for all the crazy people in the morning. We call that amateur hour. And I wait for investors who are reacting to the morning's economic news to be done with that. So I don't usually even think about trading until halfway through the session, which is about 12:45 New York City time. And so the question, is, did we get some sort of signal? Were we trading higher than $29 and a penny in the afternoon session of that subsequent day after we got a signal end of day over here? And the answer is yeah. I see all these bars trading above that level. And so I probably would have made that trade. Now, looking back in retrospect, if I come back to my daily chart, it doesn't mean that you are late, right? If we look over here, it looks like prices are still somewhat trading around that range. So if you still wanted to try to jump in, you're getting some more follow through, you could probably still get a similar price. And if you owned that stock, right? If you owned that substitute call option, then when it comes back up and it reverses again, you'll be able to sell call premium, buy protective puts, and start that income engine. And that's what I would do here. I would definitely get into some Pfizer.
All right, Pfizer looking good on the setup. Thank you for that, Lonnie. Moving on to our third and final name out of Boston, Massachusetts. Tim wants to know your take on Marathon Digital, ticker symbol MARA, a name that we've talked about more than a handful of times on the show.
Look at this. You guys are finding all these great symbols. So far, my favorite of the ones you found was Pfizer. Victoria's Secret, we know, is not primed for a purchase right now, but after earnings, it might be. So I would say Pfizer, Victoria's Secret. But let's take a look here. The reason why I'm kind of digging on this is I see what you're seeing, Tim. I'm seeing that a bottom signal came to us on August 15th. I'm going to do the same thing that I did with Pfizer. I'm going to see if we had gotten follow through on those subsequent days. So if I zoom in here, here is August 15th. So August 16th, we would have wanted to make sure that price is trading above the previous day close, the confirming day close, and the open range. And sure enough, with the open range being the highest of those three prices that I just mentioned, right during the last hour of trading, that's called professional hour, we got price action above $16.21. So we got an opportunity. We've been seeing gains. We saw just yesterday its first kind of break from that 4 or 5 day rally, but now it's back up again. We might be at a point, and I hate to throw water on your parade, but we might be at a point that we say that we missed the ball. We did not call the ball when we had to, and we're already trading up at $1.50 higher than our entry price, back on the 16th. So it might be that you missed the, opportunity of a lifetime to acquire this stock. And I'm not sure where top is going to be found. I can see here that we got into this tight consolidation. We popped up, came back down. I don't know where we're going to find a top. We got to wait for the signal. But I have a sneaking suspicion that you went ahead and you missed your golden opportunity to buy some of this stock. Never fear. When we get to our top, you'll short the stock. You'll either short the stock or you'll buy your substitute put option. That way you'll be ready to make money as it goes back down. And once it bottoms, you've got your covering position in place. Your next step is then going to sell put premium. Remember, we could do this both ways. And I've met so many people who say, I really understand covered calls, but you confuse me with covered puts. It's the same thing. It's just flipping it upside down. Instead of, doing your initial covering position at the bottom and selling calls at the top of the channels, you're going to do your initial covering position at the top and sell puts at the bottom. It's just the same, but flip-flopped. You need to have both of those strategies under your belt. Don't just think that you can get by understanding covered calls. Come to me. I'll give you a good schooling on the comparing and contrasting of the two. In the meantime, I think we missed our bottom. We'll wait for a top, and when we get our top, short the symbol and or buy the back month deep in the money put options.
And once again, the link to that webinar, AJ's webinar, where he breaks down some of these strategies a little bit more in depth, is in the chat. So head on over there. Thank you for that, Tim. Marathon Digital, 3 lovely speed round picks for the week.
I like Pfizer.
It looks like the markets are settling in a little bit following Jerome Powell's speech. So, AJ, question, heading into the weekend, heading into the last week in August, what are your thoughts? What are we looking for? What should we as investors be on the lookout for next week? And any big economic news that can maybe shake the chop?
No, I don't see anything happening big time until maybe after the Labor Day holiday in September. So we're talking about 2 weeks, maybe not even until the Fed meets again September 18th, and we find out whether they drop half or a quarter point. I think a half point might cause a little bit of hysteria in the market. So I'm actually banking on it being just a quarter point. With all that said, I mean, I'm going to take advantage of I'm going to take these lemons of sideways chop. And like I said, during this whole call, the theme of this whole call is I'm going to make sweet ass lemonade with it, because I know how to sell premium. And that's what the market is just begging for us to do. We're going to pay attention to where we top out, and then watch it as it goes back down, and just pay attention to where the tops and the bottoms occur. But you know what? Selling premiums where it's at. Let's get into it. Do your research, find those stocks, start selling premium.
Yeah, and if anybody watching, listening hasn't started, this is a great time. Like we spent a good 20 minutes describing why the chop is a great time to become a premium seller.
VIX is high.
And yeah, now's the time to get in there. So if you want a little bit more education, the link to the webinar is there. The team at Trading Trainer is also on standby to help answer any questions. So if you head on over to the site and you want to learn a little bit more, we've got some dedicated people there for you. Otherwise, we appreciate everybody tuning in today. Feel free to show a little bit of love. Hit that like, hit that follow, hit that subscribe button. We do truly appreciate it. We're doing our best to bring you high quality content every week. AJ, thank you for your time today. And yeah, let's back to school season, back to routines. Hopefully we can continue to find some winning opportunities and grow our investment portfolios holistically and kind of help each other along the journey to that success.
Absolutely.
So thank you, AJ. Thank you, everybody, for tuning in. That's it for us today. We'll catch you guys next week.
Bye, everybody.
For tuning into the AJ Brown Show. If you're interested in learning more about AJ and his investing techniques, head on over to tradingtrainer.com and create your free account today. And if you're not already a subscriber to the show, hit that subscribe